Hey guys, welcome to another trading week. This week I just want to take about 8 minutes and show you some of the fundamental indices that you should consider before you place trades. Okay, so if you are new to this channel, I want you to click on the subscribe button and follow us. And also note that every week from Monday to Friday, I'll be here to drop one live signal for you. So if you are looking for free signals, you don't have to pay anything. And most of these signals are swing, so you can always come to the channel every morning from Monday to Friday and you will find free content that can help you in your forex trading journey. Right, so without wasting time, let's go to the screen and continue with the fundamental. So some of the fundamental factors that will be affecting our trades in the coming week are what I want to show you today. And if you'll be trading, it's not good to rely 100% on technical analysis. Technical analysis is good, but sometimes we need to balance it with the fundamentals. And if you look at it here, I have some charts I want to show you. The first chart here on my screen, you can see the title is the hedge fund sentiment, and this hedge fund sentiment is actually the total positions of institutional traders, all those people that are trading in billions of dollars. Their trades are far bigger than the trades of retail traders, so we need to pay attention to what they are doing. So if you look at this chart here, you will see that hedge funds are selling the US dollar, they are selling the Japanese yen, they are selling the Australian dollar, and they are selling Canadian dollar, and generally they are increasing their buy positions on the British pound. Okay, so if you are going to be trading in this coming week, you need to, in this new week, you need to understand that hedge funds are net short on the US dollar, and net short on the Japanese yen, and net short on the Canadian dollar. They are massively buying the pound, so they have extra confidence on the pound. Now, another thing we want to show you today is the GDP data of different countries. You look at the GDP of the United States is high. When the GDP of a country is increasing, the value of their currency tends to increase alongside. So if you look at it here, the GDP of America actually dropped slightly from 3.8% to 3.2%, but it's actually higher than most of the other top countries in the forex market. Okay, so look at GDP. US is well positioned. Then Switzerland actually has a decline in their GDP. If you look at it from 0%, it's actually sitting at 0.30%. It has remained there for a while Japan had a slight increase in GDP from minus 0.1% to 0.1%. So slight increase. Australia actually has a GDP that is at 0.20%, while New Zealand seems to be in a recession because for some time they have had negative GDP. Okay, so when it comes to GDP, the US dollar is well positioned, right? So let's go on to another data that is of importance to us here, which is inflation. You look at the inflation in the United States. Inflation in US is actually currently at 3.2%, a slight increase from 3.1%, right? While Switzerland has inflation level that's 1.2%. Now, what I want you to understand here is that all these major currencies from US, Swiss franc, Japan, Australia, New Zealand, and all these top 8 currencies, their central bank like their inflation rate to be at 2%. So when the inflation is below 2%, they will tend to change some things in their economy to make sure that inflation moves to that level, because at 2% inflation, there can be stable economic growth. But what we observe here is that for Switzerland, their inflation level is far below 2%. It's at 1.20%. So we should be expecting the central bank to weaken the currency a little so that inflation can come up to 2%. So that is what we are seeing. All right. So when it comes to Japan had inflation at 2%, but is currently growing a little above the 2% mark, which is at 2.1%, as you can see. So on the chart, you can see slight increase. For the other currencies like Australia, New Zealand, Canada, pound, and the euro, all these other currencies, economies, they've been having a decline in their inflation level. So when inflation is above 2% but is trending downward, the central bank will normally sit down and watch what is happening. As inflation keeps dropping, they are not going to increase their interest rate at any time soon. Right? Though very soon we'll be entering a period of rate cut. Right? So that is that about inflation. When it comes to inflation. Two countries we need to pay immediate attention is the Swiss franc and the Japanese yen. Switzerland is cutting interest rate, is having a smaller inflation, a lower inflation than expected, while Japan has inflation appreciating. Okay, so two countries, Switzerland has the opportunity to inflate their economy because they need inflation to boost economic growth, right? So let's go to the last one, which is interest rate. So when it comes to interest rate, you can see in line with what we have seen previously, Switzerland has begun to cut down on interest rate. You can see their interest rate was at 1.75%, but they have cut it to 1.50%, which is 25 basis point cut. So that shows you that the Swiss franc is going to be weak in the coming week and probably up to a month and beyond. Okay, US has kept interest rates steady at 5.5%. Japan had a kind of interest rate hike from minus 0.1% to 0.1, slight increase in their interest rate, though this kind of interest rate hike is not a kish interest rate. This is dovish, so we are not expecting so much impact on that. But you should bear in mind that Japan has interest rate increase, while Australia, New Zealand, Canada, Great Britain and the Eurozone have kept their interest rate stable at their different interest rate levels. We are expecting the first of these central banks to cut on interest rate. So generally speaking, what we can observe here is that Switzerland is going to be a weak currency in the coming week and month, while Japan might be having a level of indecision. Okay, but if you come to Bloomberg, you will see hedge fund boost bearish yen bet after Bank of Japan's dovish hike. So you can see this headline news telling you, affirming what we have already seen on the hedge fund sentiment, that hedge funds are adding to their positions against the Japanese yen. The hike we had there was not a hawkish hike, it was actually dovish. So their GDP is down and they are hiking, so that hike is not going to do much. So hedge funds are seriously adding to their positions on that. Another thing you should also, the pound's worst week of the year is upending at 5.5 billion trade. These are major things that you need to understand as you are going into the new trading week. If you have any question related to these fundamentals that I have just dropped, I want you to ask it on the comment and I will reply you. But note that from tomorrow, Monday, I'll be uploading my technical analysis, because we have just done an overview of the fundamentals, but we'll look at some technical analysis, what trades will be taken. All right, so thank you for your time on this video. If it was helpful to you, I want you to just do me a favor, click on the